Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge and basically the banking awareness part of it, and in the previous lecture we had completed the Banking Regulation Act 1949. So basically in this lecture we are going to start with another important topic of the banking awareness, which is basically known as the types of banks. Okay, it means that when we go further down in the banking sector, we will find out that there are various types of banks which are associated with some general and some specific, you can say, works to do. All right, and on the basis of their work and various things, they are basically divided into the different types. All right, so that is we are going to start with, and we will have a discussion over various banks, their functions, all right, the establishment, regulatory framework, and various other things associated with them. All right, so this series of types of bank is also going to be very important from the examination point of view, as well as your general awareness regarding the economy and the banking sphere of the India. All right. So I hope that you revise the previous lecture carefully before you have come for this lecture, as it is for your own benefit. All right. So in this lecture, basically we are going to start with the introduction. All right, like what is the types of banks and how do we define them as a types. Second thing, we are going to start with the first type, which is known as the commercial banks. Okay, so let's start with the introduction of types of banks. Okay, so the term types of banks refers to the various categories or classification of financial institutions provide banking services to individuals, businesses, and entities. All right. So basically, it is like a categorization. Okay. Providing banking services to individuals and other entities. Like, suppose there are four banks A, B, C, and D. All right. Four banks. Okay. One thing which is common in them is that they all are what? They all are banks. Okay, that is the common thing in them. But if we go further down in their system, then we will find out the one bank is basically accepting, or you can say general banker. Okay, one bank is only for the investments, one bank is basically for the payments, and one bank is basically for some schemes and all. All right, so the common thing in them is the banking, but the thing which categorize them or separate them from each other is their specific sphere. Like A is a general banker, B is an investment bank, C is a payment bank, and D is a scheme bank. All right, that's how the categorization occurs. Okay, let's move forward. Banks are organizations play a critical role in the financial system by accepting deposits, providing loans, facilitating payments, and offering various financial products and services. All right. So far, whatsoever discussion we had done since the banking history, okay, thereafter, banking evolution, thereafter, Banking Regulation Act, 1949. So, whatsoever discussion we had in these three topics, I hope that you are well aware about that how the banks are important for the economy, right? Because they are providing this kind of services which are very, very pivotal for the economic growth. Okay, that's why these organizations are important for their critical role. Okay, the classification of banks is based on different criteria such as their ownership, nature operations, target customers, and range of services they are offering. Okay, so please write down these points. The first is the ownership. Okay, second is the nature of operations. All right, third is a targeted customers. Fourth is a service range. These are the main points on which the banks are getting differentiated. So we can say we have four banks: Bank A, Bank B, Bank C, Bank D. And if we have to divide them, if we have to divide A, B, C, D, okay, then these are the 4 points which will formulate a base for the division, okay, amongst these banks. 1, 2, 3, and 4. Okay, so remember this point. Now, I hope that you have got a little bit introduction about the types and how the types are defined in the economy. Okay, and how the categorization happens. Now we are going to start with the types of bank, and the first type is the commercial bank. The first type is the commercial bank. Okay, but here is a one thing. In order to understand the working of the commercial bank, we must understand what do we mean by commercial. What do we mean by commercial and what do we mean by non-commercial? This is we should be understand because you have seen many times there is a words like commercial ads, commercial advertisement, you can say it. Okay, thereafter commercialization of banks, commercialization of public enterprises. This word you have listened many times. Okay, but have you ever tried to drop out the meaning, like what is the meaning of commercial and how you can say that something is commercial or not? Okay, so actually we have to understand this thing first, then only we will be able to grasp the facts and figures properly. Okay, so if we talk about the commercial, let me give an example first, then I will give the definition. Always it's happened like first the definition is given, second the examples are given, but right now I'm just reversing the situation so that you could understand it better. Okay, so suppose this is the person who is investing, or you can say who is producing 10 units at rupees 10 each. Okay, so you can say cost of production will be rupees 100. That's it. This is the first case. Okay, but do you think that that person who is the manufacturer here, or you can say he will also the seller, because he will not keep this thing with himself, he will sell it to the customers. Okay, so do you think that he will sell out the products at the same cost on which he had produced them? It means that total cost was 100, so that the 10 units should be sold at 100 rupees. Do you think that? I think it is not possible. It will not happen. These units will not be sell out at 100 rupees. There might be some change. Okay, so we can say 10 units at rupees 10 each plus rupees 2 at each unit. Okay, so it means that 10 units now are producing at rupees 12. So 120 will be the total cost, right? Or you can say 120 will be the final price on which this thing will be sell out to the customers. Okay, so here if I am asking you what is the significance of rupees 2 in this production, so will you able to tell me this thing? Yes, you can say this rupees 2 is basically the additional amount, or generally we call it profit. Okay, so that fellow or that person who is producing these 10 units is selling out the units at rupees 120 net at rupees 100. It means that he is getting rupees 20 as a overall additional price or overall profit. Okay, because of this earning he is producing the 10 units. All right, so we can say commercialness is basically producing and selling out things like goods or services to customers with motive of earning profit. Okay, this is the basic definition of commercialness. Okay, it means that whatever services or whatever goods are being offered to the customer to purchase, all of these things are being done for earning one and one only profit motive. Remember this thing. Okay, so now I hope that your understanding of commercialness is clear. Okay, but what is being sold by the commercial banks? We have just got to know that the producing of goods and services for earning profit. Okay, and this is the answer. Why? Because it is clear that the banks are not producing any goods. It is clear they are not producing any goods, but they are offering the services. Services, what kind of services? Various kind of services, but broadly we divide them into two types. First is deposit acceptance. They are accepting the deposit, keeping with themselves, giving the interest on them. Second is granting loans. They are providing the credit facility or loans to the person who required it and earning the interest. And we had already calculated that if the bank is giving 4% interest on deposits, then they will be charging at least 8% interest on loans. Okay, so here the 4% is the additional amount, or we can call it profit. Okay, so now I think that the justification for the commercialness of banks is clear to you. Okay, now come back to the topic. So the commercial banks plays a pivotal role in the financial system of India. Financial institutions that provide a wide range of banking services to individual businesses and organizations. These are their clients. Okay, commercial banks are regulated and supervised by the Reserve Bank of India and categorized into two main groups, PSB and the private sector banks. Okay, so as per the Banking Regulation Act 1949. RBI is the regulatory authority of these commercial banks. Okay, and when we go down in deeper, we will find out the commercial banks could be divided into the public sector banks and the private sector banks. Okay, so let's start with the public sector banks first. Public sector banks are government owned banks where a significant majority stake is held by the government of India. Some well known PSBs include State Bank of India, Punjab National Bank, and the Bank of Baroda. Okay, so here you need to understand that bank is an organization. Bank is an organization. Okay, and basically the word organization means various peoples working together and involving some work to achieve common goals. This is the organization. In banks, various peoples are working together and they are working for achieve the common goals. All right. So bank is an organization, and every organization had or have, you can say, every organization basically having a ownership or stakes. Okay, and this is basically about 100%. Okay, this is basically about 100%, and the person who holding the maximum stake percentage will be the owner. Okay, for example, this is XYZ. Okay, this is having 100% stakes in total. We had here three people. We had here three people. Okay, Mr. A, Mr. B, and Mr. C. Mr. A owned you can say 51% of the stakes. Mr. B owned 19% of stakes. Mr. C owned 20% of stake. Okay, so if we go by this calculation, we will find out he should be the owner. Why? He has the maximum stake of XYZ, whereas C and B must be the partner or the stakeholder or shareholder, but the owner will be the A. Okay, so that's how in the public banks, out of 100% of stakes, the government of India owns more than 50% of stakes. Okay, so that's why the government is basically the owner of the PSB, public sector banks. Okay, so remember this thing. PSB plays a crucial role in country's banking system and economy. They have a widespread presence across the nation, providing banking services to various segments of the population. Okay, generally, public sector banks are encouraged by the government to open their branches at different places, and even they get the assistance from government, like in terms of finance, in terms of expertise in various fields, because they are government owned. All right, so that's why government try to enable them to expand faster. Okay, second is public sector banks implement the government schemes and the policies promoting financial inclusion, rural development, and priority sector lending to support sectors like agriculture, small and medium enterprises, and affordable housing. All right. So if we try to understand it, then basically suppose this is the XYZ. Okay. And in XYZ, the government owned more than 51% of stakes. Okay. It means that the government is the owner right now. Okay. Remember it. And if the government is the owner, then the government could directly use the XYZ to implement the various policies formed by the government for housing, okay, for health, all right, for infrastructure, and etc. Because the government having a full control, government is the owner, all right. Okay, and also the government emphasizes more on the PSB to grant the loans for the priority sector lendings like the sectors of agriculture, small and medium enterprises, and affordable housing. It means for the housing sector. Okay, and basically you can say the public sector banks are the nationalized banks. Okay, as a government owned entities, PSP may have social and public welfare objectives such as offering subsidized loans and the financial services to the undeserved population. Now, here we had a word subsidized loan. So, can you please tell me what is the meaning of subsidized loans and unsubsidized loans? What is the meaning of it? Basically, if we try to understand it, we will find out the word subsidize stands for the privilege, right? Some kind of privilege. Okay. So basically, suppose if there is a person who is going to take a loan from the bank XYZ, all right. So there must be some interest chargeable on loan. Okay. Suppose he had taken the loan for rupees 4 lakhs. All right. So he must have to pay some interest on it because this interest will be the income of the bank, right? And if the bank is not charging the interest, then how will the bank earn? And if the bank is not earning, then how will it function? Okay, so we can say the charging of the interest is fixed, all right? But suppose there is another person also who has also taken rupees 4 lakhs loan. Okay, so the first person is required to pay 8% interest rate, but this person is required to pay no interest. Okay, so in such a case, the first is the case of unsubsidized loan. Second is a case of subsidized loan. Got it? So we can say in subsidized loan there are no interest bearing by the loan taker. Okay, in subsidized loan, interest is bearing by the loan taker. Okay, there are two cases. Got it? So, can you say that in the subsidized loan there is no interest? No, I'm not saying this. Why? If you go with the definition, I said no interest bearing by the loan taker. I didn't write that there is no interest. Okay, so we can say In both the cases, the bank will charge the interest because the bank has to earn, then only the bank can run, right? But this person who has taken the loan on the subsidized loan category, okay, his loan will be bear by the government. Okay, it means that the 8% of 4 lakh is to be given by the government, not by that person. Okay, so you can say in the subsidized loan, government bears the interest. Okay, so the public sector banks which are under the control of the you can say under the control of the government ensures that they provides a subsidies loan to the weaker section, the section who could not afford taking the loan at 8% interest rate or any interest rate prescribed by the bank which is out of their limit. So in such a cases, the person can take the subsidized loan from the public sector bank in which the interest will be bear by the government, but the loan amount would be granted to that person who had applied for the loan. Okay, thereafter, undeserved population is basically the economic weaker sections. Like I had told you many times, no one is more greedy than a bank, right? I had told you. So bank generally prefer to the customers who could afford the yeah, you can say who could afford the high interest rate while bearing the loans. All right, so bank generally do not prefer the economical weaker sections, but in the PSP the government can direct the public sector banks to pay attention to these ones. All right, the government appoints a board of directors and the management of PSP, and they operate under the supervision and guidelines of the Reserve Bank of India because the government is the owner of the bank. Now we have the private sector bank. Okay, so what do we mean by the private sector banks? Private sector banks are the privately owned banks operate under the regulatory framework established by the Reserve Bank of India. It means that if there is a bank called XYZ, it having 100% stakes. Okay, so in such a scenario, the private player will own about 51% or more stakes. Okay, that's why the ownership will be lies with the private player, not with the government or any other entity. Okay, so please remember this point. All right, they are the privately owned because 50% stakes or more stakes are capped with the private players, not with the government. All right, but they are also comes under the regulatory framework of Reserve Bank of India. Okay, however they are owned by the private players, but they are also required to obey the rules and regulations provided by the Reserve Bank of India. Okay, examples you can say the HDFC Bank, the ICICI Bank, and the Axis Bank. Okay, private sector banks are known for their efficiency, innovation, and customer centric approach. They often introduce new banking products and technologies to attract customers. Basically, what generally happen when we talk about the two types of banks, public sector banks, and then comes the private sector banks. Okay, once read it again, then I will tell you. Private sector banks known for their efficiency, innovation, and customer centric approach. It means that they have to work efficient, they have to be innovative, they have to be customer centric approach, and they have to introduce the new banking products and technologies to attract customers. Now come to this. Okay, so basically the public sector banks are generally supported by the government in funding. So they are relaxed in operations. Okay, But for private sector banks, no support is provided from government in terms of funding. The bank is its own for operations and for fundings. Okay. The public sector banks are generally supported by the government. It means they are funded by the government, but the private sector bank has to do each and everything on its own. All right. That's why they have to be more innovative. That's why they have to be more customer centric. That's why they have to be more efficient. And that's why they have to introduce new and new technologies to attract the customers, because they are not getting any fund. It means, suppose if there are two banks, XYZ, ABC. Okay. This is government supported because this is the public bank. All right. This is private funded. This is private bank. All right. Both banks had occurred the loss of rupees 500 crores. 500 crores loss. All right. So for XYZ, government will bear up loss causes. Okay. Or you can say loss cost. In the private funded bank, the bank and its stakeholders have to bear the loss. It means that they are not getting the support from the outsiders, or you can say they are not getting the support, but they have to do each and everything on their own. Okay, clear this point? So that's why they have to be more efficient, innovation, and other things. These banks cater to specific segments of the population and offer a wide range of services, including retail banking, corporate banking, wealth management, and digital banking. Okay, because they are more profit oriented. Why? Because they have to earn more and more money so that they could operate. They are not getting any funded from the government. All right. That's why they have to cater the specific segments. Okay. Suppose if this is XYZ. Okay. And this is the private bank. Here comes the two people. People A, people B. Two peoples are there. Okay. People A could bear the loan at 8%, or you can say at 10%. People B could only bear it for 4%. Okay. XYZ has only rupees 1 lakh to be lent out or to provide as a loan. Both A and B required 1 lakh as a loan. Okay. So just put yourself in place of XYZ. Whom should be given the loan? Tell me. If you are focusing on the profit, which is the main you can say reason behind the operation of private banks, then they will choose the person who could bear the more interest, because the more interest equals to more income, right? So they will only focus on A. They will not cater the B. In such a scenario, the B could reach the public sector banks which are funded by the government so that they could bear this much low interest. Okay, so remember, in such a case, it is become a specific segment because both are the part of the population, but they had only focused on the A. But in the PSP, both A and B will be catered. All right, so remember this thing. Specific segment could be preferred by the public sector banks because they are focusing on earning profit on profit. All right. Thereafter, including the retail banking. What do you mean by the retail banking? What do you mean by the retail banking? So the retail banking basically means you can say traditional banking in which normal services like accepting deposits and granting loans are performed. Okay, and remember one point also, transaction involved are of low denominations. This is the retail banking. Traditional banking, like accepting the deposits, granting the loans. Okay, like me and you. One person is going to the bank to deposit the money, one person is going to take the loan. All right. And the transactions are generally small. They are not of the high, you can say, value. All right. Like someone deposit 10 lakhs, someone withdraw 2,000, 30,000. This is the fact. All right. But second was the corporate banking. Okay. So you can say corporate banking, a banking in which the banks deals with corporates to provide credit lines and make investments. All right. Transactions are of higher denominations. Okay. So the corporate banking is a banking in which the banks deals with the corporate. Okay. They are not dealing with the normal people. They are dealing with the corporate, and basically they are providing the credit lines. Like they are providing the check facility. They are providing the cash certificates. Okay. They are providing the bills of exchange and etc. These are the part of credit lines provided by the banks, and also the investment, like the bank investing in the company. But remember, the company under section 8 of the BRA must not involved in any kind of buying and selling of the goods, right? So this is the corporate banking. Transactions of the higher denomination, like 1 crore, 3 crores, even 5,000 crores, 6,000 crores, because now the corporates are involved. All right. Thereafter, the wealth management is like, if this is a company ABC, okay, they had rupees 100 crores. So they could simply ask their bank like XYZ, okay, they would provide their 100 crores to the XYZ, and thereafter the XYZ would use it in different areas, like making investment, granting as a loan, making the time deposit. All right, each and every action would be communicated to the ABC about the 100 crores, and also the profit will be shared to the ABC. All right, in lieu of this, or you can say in exchange of this, the XYZ bank will charge some fees. Okay, digital banking, like now you can see you have a app of each and every bank to perform various tasks. All right, so this is the private sector banks services and the specific segments criteria. Private sector banks are subject to the market competition and strive to maintain profitability while meeting regulatory requirements. Okay, because they have to bear the market competition. All right, it means that they have to attract more and more customers, because the more customers they have, the more income or the more profit they will have. And when they will have the more profit, it means there are more chances for their survival. Okay, so they are subject to face the competition, they have to maintain the profitability for their survival, but they are also required to prescribe the regulatory requirements, means to follow all the sections of BRA, to maintain the CRR and the SLR at to the fully standard. All right, got it. They have flexibility in decision making, including setting interest rates, product of offerings, and operation strategies, but they must adhere to RBI regulations and guidelines. Because they are privately owned, they are privately owned, so there is no government interaction or intervention, you can say. Intervention in their operations, because their board of members are selected by their shareholders in the annual general meetings, AGM. All right, they are allowed to formulate the policy as per their own, they are allowed to operate as per their own, but as the adherence to the rules and guidelines prescribed by the Reserve Bank of India. Okay, unlike the private sector banks, where the unlike the public sector banks, sorry, where the government appoints a board of directors, government formulates the policies, and governments continuously intervene in the functions. All right. Thereafter, if we talk about the functions of commercial bank, commercial banks perform several essential functions in the economy, like accepting deposit, as we have discussed. Banks provide a safe place for individuals and businesses to deposit their money, offer various types of deposit accounts, including saving accounts, current accounts, fixed deposit, and recurring deposits. Okay, as per the type of deposits, the interest rate is provided. Okay, second function is extending credit. Banks lend money to borrowers, including individuals, businesses, and government entities, offer loans for various purposes such as personal loans, home loans, business loans, and agricultural loans. Okay, not only they are accepting the deposits, but also they are providing the loans for various purposes, like the personal loan for yourself, home loan to buy the home, business loan to invest in the business, and agricultural loans to invest in the agriculture. Facilitating payments. Commercial banks offer payment services, allowing customers to transfer funds, make payments, issue checks, and use electronic payments methods like NEFT, RTGS, and UPI. About them, we will have a detailed discussion in the upcoming lectures. Till then, just revise the facts I'm telling you now. Providing investment services. Banks offer investment products like fixed deposits, mutual funds, insurance, and wealth management services to help customers grow their wealth. Okay, whenever you use these services, you have to pay some charges to the bank as the fee, or you can say as a service fee. Okay, foreign exchange services. Commercial banks facilitate foreign exchange transactions, including currency exchange, remittances, and trade finance services for importers and exporters. All right. Like, is someone buying something and someone selling something, so the bank will deal on behalf of them to make the payment or to accept the payment. All right. Then comes the safekeeping of valuables. Some commercial banks offer safe deposit lockers for customer to store valuable items securely. All right. If you want to secure your valuables, you can go there. Government businesses. Banks also handles the government transactions, mainly the public sector banks who are working under the government. Thereafter, rural and agricultural banking. Commercial banks focus on rural agriculture banking, providing financial services and credit facilities to support rural development and agriculture. In this also, mainly the public sector banks interested. Okay, so commercial banks are the backbone of India's financial system, contributing significantly to economic growth, financial stability, overall well-being of the population by facilitating access to banking services and credit. Role in supporting economic development and financial inclusion essential to the country's progress. Okay, so in this lecture we have done with the commercial banks. In the next lecture we will start with an regional rural banks. Till then, just revise the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and thank you.